Hi, everyone. Welcome to DomainSherpa, and thank you for tuning into the podcast with the best domain name and digital asset content in the world. Today's episode is Down the Rabbit Hole, called Down to the Wire, where Drew and I are joined by none other than Andrew Allemann, founder, owner, and operator of Domain Name Wire, the preeminent news source for the domain name industry. Andrew was actually the first interviewee on DomainSherpa back in 2011 and is now on for the first time since I'm host in what is our 865th show. But more on that later in today's episode. We talk about how Andrew started Domain Name Wire and then started the DNW Podcast, both of which can be found at domainnamewire.com. And we also get Andrew's take on the current state of the domain space, the future of domaining, along with a discussion about domain marketplaces and why competition is good for innovation. All that and more is coming up on today's show. And remember, if you're listening to the audio version of this podcast, you can also watch the video version at DomainSherpa.com and on our YouTube channel at ds.tv. You can also listen to the shows on Apple and Spotify and other podcast platforms as well. And please make sure to hit the like button and the subscribe button and all that good stuff everywhere that you can and help DomainSherpa grow the pie. We also integrate our shows with Muse.ai, which provides search functionality for the shows and transcripts as well. So definitely check all that out. And big, huge shout out to DNWE, short for Domain Name Wholesale Exchange. It's a trading platform designed specifically for domain investors, streamlining the process of buying and selling domains to make it quicker and easier. With a community of over 3,500 investors, DNWE enhances market liquidity, facilitating more efficient transactions with standard domain listings, reverse auctions, standard auctions, and the soon-to-be-added portfolio auctions, which will include traffic portfolios. DNWE is part of EW3N, a family-run digital asset investment company based in London, England, that also operates DomainManage.com, a global sales platform, and Brandable.uk, a marketplace for UK and co.uk domains. Check DNWE out at DNWE.com. Also, their domain industry scavenger hunt is currently taking place. So if you haven't checked that out yet, please go to community.dnwe.com and check all that out. We'll be announcing a winner on or around August 22nd. Huge shout out to everybody who participated, but an even bigger shout out to everybody that contributed time and prizes and all that good stuff. Pretty awesome. And last but certainly not least, shout out to our own business, MediaOptions, the #1 domain brokerage in the world, specializing in domain acquisition, sales, and appraisals. Find out more at MediaOptions.com, where you can also sign up for our newsletter for the best domain names and domain opportunities available in the market every week, and also featuring key insights and other helpful information related to branding, naming, and of course, domain investing. So with all that, it's now time to get into this episode of DomainSherpa, where all roads lead to domain. So let's jump down the rabbit hole. What's up, Sherpa Network? Thank you for tuning in today. My name is Jonathan Tenenbaum, a.k.a. JT, a.k.a. J-On, a.k.a. Sherpa Winfrey, and I'm the host and producer of DomainSherpa, where all roads lead to domains. Today's show is part of our Down the Rabbit Hole series, because as we say here on DomainSherpa, all roads lead to domains. And in the reverse, our work with domains has us venturing all the time into different areas, topics, some domain related, some not so related, hence the jump down the rabbit hole. This particular show started with my homegirl, Jen Sales. Shout out to Jen. Described it as a tech-adjacent, digital asset, pop culture, tangent positive monthly podcast with some domain stuff thrown in for good measure, although we do find ourselves leaning into the domain stuff more often than not because that's who we are and what we do. So we try to find interesting people and topics to get into, and we do what we do, and today is no exception. Very, very excited. So let me go ahead and introduce the guest. We got a special guest, but I'll save that for a second. So I'll introduce the not so special guest. No offense, Drew, but over to my right, I got my boy Andrew Rosner, aka the not so special guest, aka Morpheus, aka Dirk Diggler, Digital Assets, aka Bob Lee Swagger, the Sniper, aka Graybeard, the Domain Pirate. What's going on, dude? How are you?
I am great. Just kicking it. Summertime. Market's actually not even that bad considering it's mid-August. I'm living my best life. I'm actually going to have dinner tonight with Ryan Ewan from the new owner of DNWE and Domain Manage, new sponsor of DomainSherpa, as a matter of fact. Shout out Ryan. It just goes to show too, how you can go from one end of the spectrum to the other. We were going to actually box to settle our differences of opinion on a matter. And then we went from that to we're having dinner tonight. It's amazing. This is what free market capitalism can do. It can make friends of enemies. You know,
Hey, all
it's a
roads lead to
tremendous
domains,
thing.
baby. All roads lead to domains. All
Tremendous
right.
thing.
Well, hey, that's great. Shout out to Ryan. Shout out to Domain Manage DNWE. Very excited. New sponsor, the scavenger hunt that we're right in the middle of right now. We can talk a little bit about as we get onto the show. Definitely, super cool, and really appreciate everything they're doing and all the people who've been part of that. So now, with that, let me get into the crux of this show because I'm super, super excited for the first time on the show since I've been on the show, and I believe potentially was the first interviewee on DomainSherpa of all time with Michael Seiger. Shout out to Mike too. Is the one and only Andrew Allemann, aka Andrew Part Deux, aka Andrew Dice Allemann, aka Clark Kent, aka domain name down to the wire, aka Andrew. If you be my bodyguard, I could be your long lost pal. I can call you Betty, and Betty, when you call me, you can call me Allemann. What's up?
Hey guys, it's good to be here. I'm glad you asked me. I was feeling a little bit left out, as like the first guest ever. I'm like, yeah, eventually. And then JT starts managing the show. I'm like, I know JT, this will happen someday. And then, I get it. I'm far down the list, but no, it's good to be here. It's good to be here.
No, well, this is, look, you're one of those guys where every time I see you, I'm like, hey, got to get you on the show. And then just trying to coordinate things and finally able to make it happen. So I think it's awesome. And
I have Andrew on my podcast, so it's
well, and I was on your podcast.
Well, it's been a while. It's been a while.
Yeah, it has been a while. We need to do that again.
I would love.
Sure.
Yeah, and I was on your podcast as well. Back when I ran NameJet, so which was
right.
Which was also, and that was probably around the time that you and I first met. So it's interesting how long and how far along things have come. And
we're all getting older. I realized that when we showed up at NamesCon the other day, or actually probably the first one's back from COVID. It's like, yeah, we've all aged a few more years. Yeah. So
no, that's it. We're not getting older.
Yeah.
We're getting better, But
yeah, that's right. Better with age.
For anybody who doesn't know, which I can't imagine you'd be watching the show without knowing who Andrew is, but the owner and everything of Domain Name Wire, the #1 journalistic site in the domain space. We reference your articles and your stuff all the time. And you have your podcast as well, and which is also great. So yeah, man. I mean, it's just again, it's first interview to joking around saying this will be the last one. We could shut it all down after this. Now it's all come full circle.
How many episodes has Sherpa had total now?
Oh,
it's a lot.
Yeah,
Billy told me it was maybe a year ago. Billy told me, or 9 months ago or something. And
yeah, we're 10 plus years, right? And
because when Mike shut it down, it was 404.
So that's really cool.
I think, and that was 2019. I think I bought it from him 5 years ago. So
a lot.
Yeah, I mean, we've been pretty consistent. There was a small period there when Tess was the host that we weren't super consistent. Yeah. But the last 3 years we've been super consistent. So it's probably, we're probably at like 2,500, I bet, 3,000, something like that.
No. If we were 404, we're probably like 600 is what I would think we're in the six.
Am I crazy?
Yeah, your math is probably.
Oh yeah, 3 years.
Look, you're excited.
Yeah,
yeah.
You're right.
You've been doing this daily for the past few years. You just don't.
We have 10,000 episodes.
Yeah, no, sorry. Yeah, I probably added.
We'll put
400 more episodes.
Yeah, we'll put it in the show notes. I think it's been about that was about episodes. We're at the point now where about that you acquired it around halftime.
Yeah. Is there really no way for me to know that immediately? Is that like not a?
Yeah, no, like
I number my shows,
episode number. Yeah,
I number mine. The problem is like I look in my stats in my podcast host, and the number doesn't match. It's off by 1 or 2, so I'm like, I guess I mess up. But
like, which one is?
Well, I would take off by 1 or 2. I can't even get into the same order of magnitude right now.
Well, we will.
I hate to put you on the spot, JT. I didn't mean to throw you under the bus there.
Exactly. He's like, if only the guy that runs my stuff would actually have that data available. Anyway, my guess is we're right about 650. Let's see. We'll run the number. We'll put it in the show notes.
We'll play it. Come on, everyone, on your calculator. How many episodes?
Exactly.
We have 500 in YouTube.
Yeah, I love it.
We've got 500 in YouTube. I don't remember. Billy didn't upload all of them to YouTube, but it was the bulk of it. So I bet 600 is about right.
Yeah. So cool.
Well, man, I mean, that's something to be proud of. I know how much work it is. I know how much work it is. It's a lot of work to put these things together. So,
well, and
you guys do it on
mean,
video.
listen, the way I think about it is between your podcast and DomainSherpa, it's really the only living archive of the people and the stories of the domain industry. I mean, literally, like those stories, the people who were involved, the transactions, the controversies, all of this stuff really would just, I mean, okay, you have some written blogs and you have some articles, etc. But to actually see and hear the people who were involved in this industry, it's really the only documented history of it. Yeah. Living archive. Yeah.
How many episodes do you have, Andrew?
I'm coming up on 500. I think I'm like 496, 497. So got a big one coming up, I guess. But you're right, Drew. Like Lonnie Bork did an episode with me, and when he passed away, his wife said she has their kids listen, to the episode, that sort of thing.
Totally.
And it's kind of, it's kind of neat to have just kind of recordings.
Dude, I get goosebumps thinking about that. Legitimately, like that's just, you know what I mean? It's important. It's really important.
Yeah, peace, Lonnie.
Someday, let's say I live a perfectly healthy life and blah blah blah. My kids are young, when they're 25 and they're like, God only knows where the world is going to be in, let's say 15 years, right? I mean, I can't even begin to fathom where we are more than 5 years out from now. But in 15 years, whatever it is, wherever we're at, it's going to be a very different world than where we are right now. And when my kids are like, what do you really do? Like, they know I'm in domains and but they're too young to really like grasp it, and to be able to go back and like listen to that is invaluable. I think it's really cool.
It will be cool. It will be cool.
Yeah.
I recently went back and digitized my parents' home movies. And, of course we, back in growing up in the 80s and 90s, we get mad at my dad for walking around with a big camcorder following us around. But now it's pretty cool to have it. It is pretty
100%.
Cool.
I tried to do the same, but my mom had them in the basement and they got moldy. Yeah. And apparently once they get moldy, you're Dunsky.
Yeah, no, my mom did it before she passed. She had put everything on DVD, and so we've got a bunch of those. And even nowadays, like just trying to get photos and stuff with our family, I'm always joking around. I'm like, making memories. Everybody take the obligatory pictures and try to get a little bit of video here and there when we're doing stuff. And or like a basketball tournament, and all the kids are like, oh man, okay, coach, or okay, dad. But I'm telling you, it's like, you'll see, guys. I mean, it's going to be the kind of, and it's so funny because they, so much of their life exists online anyway, and sort of digital media and whatnot. And, it's like, it goes fast, and then those moments are gone. What'll be kind of crazy though is, with us, with enough stuff online, there will probably be some ability to create sort of this AI Drew,
for better or worse,
for your kids. So they'll be like, "Hey, Dad, can I get some advice?" Although your advice will basically be "kill them all, kids." Like, it's like
Ayn Rand, read Ayn Rand.
This AI. You talk about ghost in the machine, man.
Which one you want, Andrew? Got about 7 different books right there.
But no, I think it's a brave new world, but it is important to live in the moment, because these times they go so quick. And but it is capturing it is pretty cool. So I mean, and also too, like, as people are no longer with us, Jason Shepard, when he passed, like, we took some of the clips from the shows that he was on, and it was really touching. Like Billy, I mean, when he put together this just a small little montage and stuff, and it's like, it's almost hard to watch, it's so like, but at the same time, it's so, it's so much of like, you get to remember him and see, it's just all, it's important. I think that just doubles back on what Drew said, which is, and the fact that you guys and Mike, big shout out to Sager as well. I mean, have been doing this for as long, and the other folks in the space too. I mean, we always, when we kind of mentioned, whenever we mention Domain Name Wire, we're always mentioning domain investing with Elliot. And although I feel like Elliot kind of has more of the slant from like a pure investor standpoint, where yours, I feel, more like,
well, Elliot's not necessarily a journalist. he's more a blogger,
Yeah.
which is,
Well,
I don't think a judgment, or I think it's just a description.
It
I
all
think
kind of blurs
what
together.
he
But
does is very
Elliot
different than
talks
what
a
you
lot
do.
about his personal experience, right?
that
Which I
sounds-
do a little bit, and it's great. I love his stuff. So
oh yeah.
Yeah.
No.
Oh,
Never, I mean,
absolutely.
well, and the point I was going to make though is that you guys have all been doing this for so long, and it's like, and we joke around. We're like, if you don't like the show, we'll give you, we'll give you a refund of what you paid, to watch it. Like it's like you guys are taking all this time and giving out all this knowledge and information, and just it's just you're giving a lot of yourselves, and it's not necessarily. It's not the core of what you guys maybe do or would want to do with your time if it wasn't. There's a very altruistic piece to it too, which I appreciate, and I hope I think the audience does. But anyway, real quick, let's talk about it real fast. So as far as when you started, so you're 500 episodes in on the podcast. Did you start the podcast around the same time that you started writing? That you started?
No. So I started Domain Name War back in 2005.
Okay.
And it's up to you. I can look it up, but
dude.
yeah. So it'll be 20 years next March. And I checked recently. I'd written, I think there were like 15,000 posts on the site, and I'd written almost all of them. I've had some other people write over time, so maybe 1,000 of them. But yeah, it's a little ridiculous. Sometimes I'll write about a topic and I'll reference something, and someone's like, "You do know you wrote about that in like 2008," and they're like, I'm like, I can only keep so much in my head, So.
Yeah. Like I thought it was just flowing, it was great.
Yeah,
so easy to write.
But back at the time there weren't. So I mean, Ron has been doing a great job on DN Journal, but it's mostly about the sales and the profiles. But there's no one doing like daily news back then, and everyone was on the forums, right? DN forum and that sort of thing. And blogging WordPress came out a couple years before that.
Before trolls existed.
Yeah. I had Matt Molenweg on the show from WordPress. And he's like, 2005. I mean, that was like early days of WordPress. So yeah, the world was.
You had to be like
different.
a techie to even have heard of WordPress.
Oh yeah. I mean, and there was no such thing as like WordPress hosting. You had to set up hosting and then download WordPress, upload it to your server, and install it, and all this jazz. So it has changed a lot.
Every time you updated it, everything broke.
Yeah. Well, that hasn't necessarily changed, but
yeah, that's true.
We've been, we've got this refresh of Sherpa that we want to get a lot, but we're so, cautious to not break everything.
Yeah.
Our WordPress theme doesn't even really exist anymore. It only exists in the sites that still use it, but there's no support, and it doesn't so anyway, but keep going. So 2005, you decided to get busy.
Yeah, really, I started it as a hobby. I was working with the guys who eventually formed iRead, Internet REIT, back in the day. And I remember we had just gone to an SEO conference in New York City, and we were sitting there at the airport lounge afterward, and the trifecta of us just wasn't working out personality-wise. And, I was like, guys, this just isn't a fit for me. So on the plane ride home from New York to Austin, I was sitting there and I was like, I still want to do something other than just buying and selling domains. So, and then I settled on starting a blog. And it started really as a hobby at first, right? And then I think Cito might have been the first company to reach out to me saying, "Hey, can we like throw some ads up here?" That sort of thing. And then other companies followed after that. Cito's been advertising for, I guess close to 20 years now.
Wow.
So it just from there, it kind of became enough to become kind of a business with all the advertising support from the industry. And the rest is history.
And then when did you start doing the podcast piece? So
that was 2014.
Okay.
So, Mike had been doing Sherpa for a little while at that point. And, one thing I remember looking around and I was like, forums had kind of died. I guess we still have one forum that's really kind of cooking in our industry and some others that are making an effort at it. Mm-hmm. But I was kind of like, everything changes. And will people be reading blogs in 10 years or will that have changed? Social media was changing the landscape and that sort of thing. So I figured I'd, try this whole podcasting thing. And I remember I had done a couple years earlier, I'd done like I call it radio, right? Because podcasting wasn't that big of a thing. Kind of like what what I guess Moniker was doing.
Yeah, Monty was doing.
Monty was
Domain Masters.
Domain Masters.
Domain Masters.
Yeah, Domain Masters.
Because we took that over.
Domain Masters Radio with
Webmaster.
And Webmaster
FM,
Radio was
FM,
I think
FM or whatever. And because we Scott Pruitt and I, when I took over NameJet, we took over the Domain Masters show and we did that for a little while. And and Monty had what was like Matt Cutts maybe from Google. He had some pretty interesting guests back in the day. And I think that's who it was. But it was kind of
it's funny too. I'll go to some like shows, some conferences, and some people come up and I'm like, oh, I love your podcast. They never go to Domain Name Wire, right? They only listen to the podcast. Whereas a lot of other people, don't listen to podcasts. They only read, blog posts and that sort of thing. So it's kind of interesting. So I'm glad I did it. But man, as you guys know, it's a lot of work doing a podcast, and
a lot of work.
You've got to
pretty thankless. You got to enjoy
a lot
it.
of work yelling at JT and telling him and Billy what to do. Like it's exhausting. But
I mean, I got to accept calendar invites. I got to check my calendar. It's turn my brain on.
Well, and for you guys who, are more traditional, like actual podcast hosts, I kind of fell into this because it was around the time that I came in, to work for Drew. Tess was, taking a new opportunity, and it was like, hey, here you go, and, and then talking to Mike and stuff, and I love it. I think it's been awesome. But talking with Mike, even at the time, since then, I realized how much he appreciated sort of the podcast space. He'd be like, hey, check out this webinar or this thing or this online forum, and, just different things around podcasting, where I'm like, it's funny. You take it so seriously, and we take it seriously in that we're doing this consistently, but he was really about it. And I think you kind of come from that same sort of school of like, almost old school in your approach of like, dedicating time and doing it professionally, I guess, in a way, like, even when, it's not part of an enormous company or something, but you guys have done this, continue to knock it out. The fact that Mike finally threw up the white flag and bounced, right? Like
it's
kept it going,
I've thought about that many times. But it's like, oh, I don't have a guest for next week. What am I going to do? And it's
dude, that's the story of my life, And but I will say, for as much of the, and for us, it's cool. We have the benefit of multiple guests on these shows, and we do it with the Zoom. So we've got the video piece. So once we get everybody gathered up, the actual shows are fun. Like this is fun, right? This is cool, and this makes it worth it. And then when you put it out there and you got people that are so receptive and, get real value and, and then you hear stories about, hey, I had my first domain sale because it was something you guys said that led me to do this, or, you've helped me, change my whole life trajectory and stuff like that. And that's the stuff where you're just like, man, it really is pretty awesome. And, recognizing that, once you sort of fall in love with the domain space and then you're like, all right, well, now I'm in this, and what can we do to help this whole idea of rising tide, lifting all boats and all that kind of stuff. And it really takes
in the last year and a half in particular, I would say, and I would think about this a little bit, but I don't know if it's like a new generation of people in the space or if it's just a different time and people are grateful or content has improved. But I'd be curious. I don't know if you've seen the same thing, but like in the last year in particular, year and a half, way more just gratitude, like people blindly reaching out and just saying, thank you. Like, you have no idea how much I appreciate the show or how much I've learned or how much this has changed my life or, this particular tip led me to make this sale, as JT was saying. It was like really, and I mostly only got, the only feedback I got prior to that mostly was negative feedback. So I don't know what it is, but in the last year in particular, all of a sudden it's like getting a lot of just
I think it's the legalization of weed across the world. It's making people more
exactly
chilling down,
everybody out. Well, it depends.
Well, but as you said earlier, with having
just imagine
episodes,
if the FDA hadn't rejected the MDMA therapy this week, then we'd be cooking. Yeah, they
but
rejected it.
I think a lot of it has to do with having that big archive, like you said. Like, I'll hear from people who are like, yeah, I started at, I came into this a year or two ago and started at episode 1, to which I'm like, oh, I'm sorry, this show was not. I was still figuring stuff out on episode 1,
Yeah.
but they're like, they go back a long way and watch. I mean, it's fun looking at your stats from really early episodes, and they still get views, they still get listens. So the long tail of podcasting is pretty strong.
So our long tail are the early episodes. We've gotten more views on those episodes since we uploaded the whole backlog to YouTube than we did when they were originally viewed 10 years ago.
Right.
It's interesting, but I'm always torn between being too dependent on YouTube or, the viewership, but
well, and that's why we spread it out. We're not all, everything's not only on YouTube, and we've got, plus we've got the Muse thing and which also provides some extra, functionality.
Well, I do audio only. I do audio only just because like the effort you have to do to get here on video and then editing, with Billy, I mean, it's another step up. Like, I mean, I had to comb my hair this morning. I had to, put on a collared shirt, it's a lot of extra work.
Tell the truth. You need to put pants on. I know.
No, I've got gym shorts on right now. So, I'm not going to stand up here. So
are you and you and Sag are going to play some pickleball later? Do you guys, do you ever,
we had tried to set up a game last week. Bainbridge Island was where pickleball was founded.
Yeah. And, Court 1.
Court 1 is just down the street from Mike. So we get together occasionally and do it. But it's it's hard. He's got family, I've got family, that sort of stuff. It's like you always mean to do stuff. I mean, he lives literally 3 miles from me, but
Yanni lives literally 10 minutes from me, and I before he had kids, we'd go out twice a month, and now it's every 2 months.
And Matt Overman lives up the street too.
That's what I was going to ask. Who are you closer? Do you live closer to Matt or Mike?
Mike. And Matt, just like Yoni, he's got 2 young kids, right? Look, I remember those days, but it's hard to make time. So it's funny. It's like, hey Matt, I'll see you at the next domain conference.
Exactly. You see pass him on a bike pass,
or maybe the post office.
Exactly.
Well, speaking of the next domain conference, so we were talking earlier before we jumped online about Istanbul, ICANN Istanbul in November. Is that when that is?
It's November. It's their annual general meeting. So I haven't been to an ICANN meeting in a while. Well, they had like one for registrars and registries in LA a couple years ago that I went to. But it's Istanbul, and worth checking out. So
you're gonna go, and Drew, you said you might go, and then after.
Well, I might go is a strong. I mean, I'm hearing about it, thinking about it for the first time today. I'm inspired to go. Let's put it that way.
Well, that's an easy trip for you, right?
I mean, it's a super easy trip. We have a direct flight.
I have a direct flight too. It's just 12 hours. So
hey, at least you get to fly direct though.
Wait a minute, hold on. You have a direct flight from Seattle to Istanbul?
Turkish Airways, yeah.
And so you're flying west. You're not flying east.
No, I'm flying east. Yeah, I think it goes east.
Yeah, I would think so.
Yeah.
You think about it, you're about 5 from Seattle.
So you're going. So you got, what do you got? You call it 6 hours to Boston, 6 hours across the Atlantic,
about 5 hours to the coast,
and 6 hours from me to Istanbul is about 4.5, 5.
No way, really?
That far?
Yeah. It's 3.5 to Munich.
This is the guy who said he's published 2,500 episodes of his podcast earlier. So
it's like,
no, I mean, if I fly to Boston, it's I don't know, it's about 8 hours one way, 6.5 the other. So it's about 6.5 hours. Boston to LA is 5. That's 11.5 hours. From me to Istanbul is about 4.5, 5 hours.
All right. Yeah. I guess
Now, look, that's with ups and downs, and so take 10% off that. But 12 hours would be short. That would be pretty fast, I'd say.
Yeah, well, you got the jet, you got the wind going with you on the way there. So,
but then that means on the way home, it's probably like 16.
I think they tack on an hour, but
No. So if I go to Boston, it's 6.5 hours.
Are you going to make me look this up? Are we going to force your listeners to find?
I just want to know specifics. No, but I think it's
anyway, I think it's a long trip. It's a long trip.
But direct flight's not bad, and I think that's pretty cool to be able to. So when I used to run NameJet, half my team was in Seattle, so I'd have to get there from Jacksonville, which was
I got an unhappy dog that wants to be let into my office.
Which was almost like the furthest possible continental flight type deal. And we didn't have direct from. I'd have to fly to Atlanta, and that was always my routine.
Yeah,
Atlanta to Seattle, but but if you can get direct, especially going international, that's pretty cool. And so all right. So Istanbul in November, and then we've got the ICA Vegas meeting in January.
Right.
So for anybody who hasn't, grabbed your tickets for that, definitely make that happen. Shout out to the ICA. I think the early bird window just closed, but I think there's still some.
It's cheap, right?
Yeah.
And the hotel is cheap. Everything about it's cheap. So other than your liquor bill. But that's
exactly.
Up to you. And your gambling debts. But again,
that's the biggest expense when you're there.
Yeah.
MediaOptions is the industry's leading domain broker specializing in domain acquisitions, high-value domain sales, and domain name consultation. As pioneers and thought leaders on the subject of the domain aftermarket and domain name value, plus through their clear domain acquisition service, MediaOptions offers startups and established corporations an unparalleled scope of high-value domain options, providing access to domain names and curation technologies not available elsewhere. MediaOptions believes in the power of a great domain name and is dedicated to helping you obtain yours. Call or email today to put a domain to work for you.
So I want to get your take. You are, sorry to pivot. This is a hard pivot here.
Yeah.
But we're bantering. So I want your take because you're the hard news daily guy, right? That's something meaningful happens in the space. You're the place I go find out what happened, get a summary of it, digest. Oh, that's the go-to. I would like to understand from your perspective as, domain investor and observer, where you think we are. Like if you've been doing this for 20 years, as we've talked about, obviously, I've been doing it a little bit less. But it's, we've watched a trajectory, not in a straight line, but it's been a mostly up and to the right trajectory in terms of price, up and to the right trajectory in terms of the volume of domain sales. There's some blips for various reasons along the way, but for the most part, up and to the right, nice steady growth. Domain registrations at VeriSign, domain registrations globally with, new TLDs as well. Everything basically up and to the right, nice steady growth. We had this major COVID thing. Sorry, I'm just sort of setting the stage, but we had this major, COVID period that, was the best 2021, I guess, with best year of business for my company ever. We might beat it this year. We're on track to, but yet to be seen. But it was just blowout year, just amazing year. Also for VeriSign, right? Massive growth in domain registrations. A lot of people now working at home, starting little side hustles, starting new blogs, people complaining about the government, people complaining about everything in the world, lots of stuff to complain about. So people starting new websites, lots of domain growth for lots of different reasons. A lot of uncertainty, I would say, last year. It was sort of a very wishy-washy year with markets, with news, with
interest
everything.
Rates.
Yeah, interest rates. It was sort of almost like the year, you could forget. It was 2023 was sort of just a very strange year. I would say this year's been a mostly positive uptrend. I think for the first time, I would say the only other time I've looked forward with as much uncertainty as I have today would have been maybe, I think when apps became like around the time, do you remember when Gary Vee gave a keynote? I don't remember which conference that was at, but Gary Vee gave a keynote and he told us that domains were going to go down in value because of apps. And I stood up and had a little, I think Morgan Layton had videoed it, but he lost the video. But I had a little, aggressive debate back and forth about, no, I don't think so. But it left me with a lot of uncertainty that lasted for a few years of like, oh man, are we sort of, out on the front of this wave, and we don't even realize it's about to crash into the beach.
Real quick.
But anyway,
wait, real quick. Andrew Allemann, you wrote an article about this, and I put the link in the chat in case anyone, but we'll put in the show notes as well. But that was back in 2014 when he spoke at Domain Fest, giving the keynote where he kind of talked about domains values going downward, which obviously is not.
Yeah, so it's probably like 12, 13, 14 range. Let's say that I was like a little uncertain. Like okay, now I've started to really make significant. I'm making some progress and I'm making some success in the business. We're 6 years, 7 years into the business. So I had momentum, but I was heads down, working hard, clearly with a heavy bias on like this has to work, right? So. It gave me a little bit of uncertainty, but that was sort of the introduction of me really thinking very intellectually about domains and what are domains and how do they fit into the world and are they necessary in the broader digital economy and what could replace it and why and all of that stuff. And, it sort of led me to where I am today. And what I took a long time in saying was sort of, I'm at a place today where I feel, some level of uncertainty, although I'm slowly getting onto a sturdier foot, but some degree of uncertainty about what the future looks like. What does AI mean for domain names? What is a change in the way that humans interact with the internet and make calls to the internet, to source information from the internet, to engage in e-commerce on the internet? What does all that mean for domain names 5 years from now or 10 years from now?
Right.
And I had a very bleak outlook, but I'm getting increasingly more, I would say, confident that domain names are probably here to stay. It's just that the attributes that create the value, the aftermarket value in these domains, the inherent value, may be driven by different attributes than they have before. We've seen that. The way SEO works has changed many times, and so value attributed to domains from SEO has changed for different reasons, right? And other things have changed the way that we utilize domains and maybe attribute value. The characteristics that we attribute value have changed. So I'm not necessarily afraid of that, but it does, leave some degree of uncertainty. All that being said, where do you sort of see us in that sort of arc of evolution of domains?
Yeah, I think, you do need to look back at history. I think most of the things that have impacted the domain business were things that we didn't foresee a couple of years before, right? So you look at the change to domain parking with Google, right? Like people in 2006 were still buying portfolios based on multiples of traffic revenue, that sort of thing. That pretty much dried up. You look at apps, right? That was one of those things that like Gary V, kind of talked there. There was some consideration about it. Ended up not being a big deal, obviously, to our industry. But you had the Chinese bubble, the Chinese investment bubble, that sort of thing. I've always said something will impact domains, and we probably don't know what that is yet. The things we're looking at now probably aren't what impact that. I will say, so thinking back to COVID, I think it certainly pulled forward a lot of demand for domains. And so we're kind of in this hangover phase, right? And VeriSign's seen that, right? Their number of .coms registered is decreasing. It has been decreasing over the past couple of years. Not by much, but, 1%, 2%, that sort of thing. And I think part of that is that, every yoga studio, every restaurant that would have gotten eventually online, got online during COVID. So that definitely pulled forward some demand. And depending on where you play in the market, that's going to have a different impact. I know you play kind of more at the top end, right? So that is more VC driven, right? And investment driven. I play more in this kind of inventory name, $1,000 to $10,000 mark. I think that has some impact there, right? The companies, like last year was a great year for me. It was probably my best ever. This year, not so much, right? And so I think, part of
Just to
that
push
is
back on that though, and maybe you're right. Maybe the point I'm about to make doesn't necessarily apply to that range of domain. But I've always thought, and I'm fairly, I have a high conviction in this, that the vast majority of our customers at the high end, but I would go beyond that. But it's an upgrade. The vast majority of domain sales that we make are not because it's a new name for a new business. It's a upgrade for an existing business. And so I could see that overhang extending, 2 years, 3 years. But then, the businesses that survive and the ones that thrive, I would say they're teed up for, that upgrade.
certainly, right? And so that would be the higher end of the market, right?
Well, not necessarily, but even the okay, maybe not the yoga studio, but the guy that but maybe
he went on a .info and now he wants the .com and it's like $5,000 or something like. I got you.
Yeah, exactly.
I got you. Yeah. And we also look last year. AI, right? I sold a bunch of domains related to AI. This year, I haven't sold so many, right? So you see how little blips like that.
So this is the next topic I want to get into. I want to get your take on is just
yeah.
Where do you see? But let's finish your thought here.
Yeah, so I think we're in a period in the domain industry, just looking at it as a whole, where we're kind of in the waiting place. What was that Dr. Seuss book? That sort of thing where. Look, new top level domains. Another round will be coming here in a couple years. That's going to put a jolt of interest in domain names. Regardless of what you think about, other extensions, that sort of thing. It drives a lot of attention to domain names. So I think that
forces people who make decisions to think about domain names.
Right. And that
some of them are going to make a decision for A, and some are going to make a decision for B. But it's forcing them to make a decision. And so I think it's only a positive, and that's what we saw with the last round is everybody thought, oh, it's going to dilute the market. No, it actually just woke up a whole bunch of people who had never given it any consideration and forced them to make decisions. Even if it was a maintain the status quo decision, it forced them to think about it.
The other thing I'd say is I think people have finally gotten over this whole idea that you can build your entire presence on social media. And, you have to have a domain name. You have to have your own website because, look, this kind of started with Facebook, right? Like you saw all those ads many years ago, like us on Facebook. And then what did Facebook do? They charged people to access their fans, right? Mm-hmm. And you see this everywhere. TikTok, I don't think it's actually going to go away in the United States. But if you built your entire presence on there and now you're like, oh man, this is an existential risk to my entire livelihood if it's on there. You see it with Twitter changing ownership and changing how it operates. You just can't rely on one particular network for your online presence. And so having your own domain name as your hub, I think people have realized that we have enough use cases now to say, yeah, you can't just rely on these social networks because their interests are not aligned with yours. So I think people have come to that point too. So I'm fairly bullish. I think, look, there are some things, especially for people like me that sell a lot of domains through the registrar path, like inventory names. We've got these changes at Afternic and you realize, oh, they hold all the cards, or they hold most of the cards, that sort of thing. And so there are some risks there. I certainly see a lot of risk. You've got, VeriSign in their continued quest to be able to raise prices, throwing domain investors under the bus. Is there some sort of risk there? I don't know. I don't really think so, other than, saying bad things about us. But there always risk. But I've always thought that everything I can see doesn't kill our industry. There's something out there that we can't see, right? And certainly 20, 30 years, when you look that far out, I mean, how long have we been doing this? Domains have been popular since the mid 90s. We've only been doing it 30 years. Who knows what the world will look like 30 years from now?
Yeah.
Hopefully we aren't still showing up to domain conferences and doing what we're doing now.
Maybe, I think that could also be a good thing, right?
Hey JT, you want to go to the retirement, the old people special at IHOP and get our pancake
get the early bird
breakfast
special.
That's where the breakfast will no longer. There won't be any dinners at clubs.
There'll be
special.
Yeah, no more parties at the clubs.
It'll be the Cuba Cup. Will be shuffleboard, and everything will change. I love the reference to the waiting place, the Dr. Seuss, and because I do think it is interesting, and it also is dependent on the type of portfolio that you have, right? Like you said, you've seen different activity trends, and then we have for the most part. Where last year was a bit of a slower sort of year. This year, especially in that Q2. We had a ton of activity and, where there were a lot of big deals happening and, and I think it's also important. And this even goes to some of the stuff that Chris talks about in his book. And when he gets into the different buyer types and, different domains will drive different buyer types. Different buyer types are going to be based on different bigger macroeconomic factors. After the COVID window kind of closed, VCs were all sidelined, right? And up to that point, I mean, it was like so many companies are getting funded. They're just throwing money at anything. So that was an even wilder time, right? And if you go back and kind of look at, and I think I liked how you reference also the China bubble, because shortly after that Gary Vee talk back in 2014 was when the big China wave happened, where you just had this enormous influx of cash and interest in domains. And, that was its own Wild West time of just so much activity and things going on and domains being traded like much, probably the closest they've been traded to commodities with 3-letter, 4-letter.coms, being bucketed and selling for a certain floor price on all the auction platforms and, all of that kind of stuff. So to your point, you almost don't know. You can kind of, AI was a trend you can kind of get in front of. But a lot of these things, positive or negative, are things that we're not going to be able to anticipate because they're just outside of our purview. We're not even really thinking about. So.
Yeah, I mean, even COVID, right? When COVID happened, my first thought is, oh my gosh, I'm going to lose all my money, right? The world's going to end. I was running my podcasting business at the time, the one that matched podcasters with guests, and travel agents were emailing me, I need to cancel, I need a refund. My business just went to zero. And we bought a house, and let's see, when did we buy this house? April of 2020. It was like 2 months in, and we're like, oh my gosh, we're gonna lose so much money on this house, but we have to move. And then it was just like the next month, those types of things you just can't you can't predict them. So you're at least consistently, right? I mean, I predicted 20 of the last 3 recessions, right? So it's just it's very difficult to do this, and so you just kind of there are things you can control and you focus on that. And then of course you do have to think about this big picture. What are the threats coming? What are the opportunities, more importantly, that are coming? But I can guarantee you when we look back on this in 5 years, be like, oh, didn't see that coming, or we thought that was going to be a risk, but it didn't end up being that big of a deal. So,
well, and I think that's the interesting thing. It's like, and one of the bigger is, we talk about this also, trying to get the right price for your domain name. When you realize you might have the best offer that you're going to get, right? Like you're in this wave of things and you have a domain, and we've had sellers that come to us and, bring them some pretty awesome offer, and they're like, I'm just going to wait because I think I can get 5x that. And then whatever that bubble is bursts, or whatever that trend is dies, and then they're begging for that offer, and then it's like, nope, you can't even get a fifth of that offer now. And so it's trying to recognize
3-letter.coms are a perfect example, right? 3-letter, I mean, the liquid value of those. What was the liquid value? Like the worst one was
2015, height of that Chinese bubble. You could sell any 3-letter.com at the very peak. I mean, maybe there was a month or two where any 3-letter.com, and JT knows this as well as anybody because they were all being liquidated on NameJet. But it was basically 3-letter.coms peaked at about 60 grand, 65 for a good one. But you could get, if it was just floor price. Yeah. And I mean floor price like in the way that it means for an NFT. It was sweep by blindly, as long as it doesn't have a vowel or a V. No V, no vowels. Ideally, no Ks. There's a few, but it was basically no vowels, no V. 60 grand.
And now we're talking
wild
12 to 15, maybe. Is kind of the.
And I remember gold was about $1,000 an ounce. It was like $950 an ounce. And that was the equivalent of a 4-letter.com. So if you had a 4-letter.com, that had no V's and no vowels, it was worth a gold coin. It was basically 1-to-1. And there was a whole bunch of people trying to, accumulate a lot of 4-letter.coms. I just remember thinking, like, man, it's the 4-letter. I just start selling them, and literally turning them into gold coins. It was like, 3-letter. It's like, no 4-letter.com.
You've got them in that green little bin behind you. That's where you keep all your green, your
Those
gold
are all
coins.
the 4-character.com gold coins.
Yeah.
But each marked with the 4-letter.com that he sold to get it. Right?
Yeah, and, I mint them in the back.
But I mean, and I do think it's pretty interesting when you see trends in the way that all flows. So what are your thoughts then? So you're bullish on domains in general. What about so this was the piece that then Drew was going to get to, which was, what do you think about the AI sort of, wave and both?
Let me phrase it differently. Is it too early to call victory over Andy Booth on .ai is a flash in the pan? Yes, it's meaningful, but there simply isn't going to be enough, let's say, dedicated AI companies that should and would use a .ai domain name to fulfill the, let's say, priced in or expected demand for these things. I would say I've proven to be right, but I might be too early and I'm clearly biased.
Well, look, I mean, there's a long term and a short term to this. Your thesis there, I agree in the long term that, over time, does every company become an AI company? The example I use for something like this, I own the domain musicphones.com, which is a pretty crappy domain today if you look at it. But there was a time when I was like, oh my God, like Samsung is advertising this phone as a music phone, because you could actually play music on your phone for the first time, right?
Yeah.
But now every phone is a music phone, right?
Yeah.
And so the term just, it's doesn't make sense anymore, right?
Obsolete.
Yeah, exactly. And so, you can make the same argument with AI, which is every domain, every company.
Or actually, obsolete's the wrong word. It's just redundant.
Yeah, redundant. Exactly. So, do you need AI in your domain name? No, because every company has it. Now, there are the companies that provide AI services to other companies. I think that makes a little bit more sense.
Sure.
My big
and
thing
then the
with
question just becomes, how many of those are there, right?
Yeah.
And
wait, Andrew,
my big
Alan,
thing, so there's a short-term opportunity to make money. Long-term, I think your thesis there probably bears out a little bit more. My big thing with .ai is that's a risky CCTLD to build a business on. It's basically run by one guy who makes up the rules as he goes. And you'll see it if you look back at the Wayback Machine on kind of the rules around it. It's like, we're going to throw this rule in there. And some of them, I guarantee you, the people registering those domains don't know about.
They have no idea.
Like the one where, if you have as seen on, on your site, or, partners, and you throw someone up there who's not actually a partner, which, a lot of companies do, they can take your name away. And even if you remove that from your site, you don't necessarily get the name back, right? And so these are things that, look, should you be doing that? No, but I guarantee you that'll catch a lot of people off guard. And I remember
it's
when
like I always say, this is the same. It's the same conclusion for any CCTLD, particularly if you're not operating in that local market, because .co, which is so ubiquitous today, and yet you have hundreds of cannabis companies in the United States operating on a .co, and it is explicit in the terms of service of .co that you cannot, because cannabis is illegal in Colombia, you cannot advertise, market, or solicit the sale of cannabis in any way whatsoever on a .co domain. And yet,
I remember when a hurricane was blowing through Anguilla, however you pronounce it, and they're like, this weekend you can't do DNS updates.
Anguilla.com, by the way.
What's that?
We just acquired Anguilla.com. We
in
got
in Cayman.
Cayman.com and Anguilla.
That guy sent me a message on LinkedIn with all those Caribbean countries that were for sale.
Yeah.
So when I saw that, I was like, oh well, that worked. That outreach worked. So
Yeah.
but yeah, I mean, look, there risks to all these CCTLDs. Now, ones that have been commercial. I mean, look, now AI is so important to that island that, I think there's a little bit more like they're not going to kill the golden goose, but it's still, look, I wouldn't want my entire company's email going through that when there's a risk that I could, lose my domain and that sort of thing. I just, to me, that should be a concern. And, to see these huge companies use it, I think
there's other
worse.
concerns as well, huh? I mean, if you consider that we're talking about AI, and probably one of the 2 or 3 single most important national security issues over the coming decades is going to be AI and trade secrets and all of this. And you're running your business on a .ai, and all of your data packets are going through Anguilla, and I don't know who could be sniffing those packets, right? And how easy is it to go influence the Anguillan government to, or maybe not even get permission, but just,
I wonder how that works because it is distributed, right? They're on all these, the naming system's out on all these routers. Like, I don't think it all goes through there.
Yeah, but on the CCTLDs, is it? I don't know how decentralized it is.
Yeah, I mean, look, there's always, I think the biggest risk with CCTLDs, like with Libya when Bitly was using it, is if the country decides to suspend a domain name, then that's going to percolate along all the root servers, that sort of thing. So I think that like Notion using .so, like Somalia. I mean, did they even realize that when they So I think those are the types of places that's kind of your biggest risk with those. The ones that have been commercialized that are in somewhat stable countries, I'm a little bit less concerned. I didn't know that about cannabis and .co.
Well,
right?
And Colombia just took a turn for the not so stable, right? So,
yeah, it's been in our lifetime, right? I mean, the 80s wasn't certainly, 90s certainly wasn't stable, and so
definitely,
but yeah, I think people overlook that. They don't even understand what a CCTLD is when they register those, right?
Yeah.
And even worse is some of these companies that are buying a subdomain, of something. Like, you remember all those ones that CentralNet was selling, like something .gb.com, and then they sell gb.com and your website, so I don't think a lot of people understand what they're buying when they buy those. So,
well, and you even have IT.com, doing a lot.
Yeah, IT.com is doing the same thing now.
Super active and, building a big, sort of business around subdomains, which if it works, credit to them. But, there's obviously risk there. So it's
right. A lot of risk. A lot of risk for the registrants, right? For the people who are registering the domains, there's a lot of risk. They even bought that domain. Thankfully, one of my criticisms, they bought that domain on a payment plan, and that was one of my first criticisms. Is wait, that you're building a subdomain, but then they ended up paying for it, right?
Well, that's that's crazy.
But I think the amount of money they put into promoting that, they probably should have bought a real new top level domain off someone, and the stability there. So anyhow, not my money. They can make their investments how they want.
Oh
so.
yeah, no, look, I mean, I
free
think,
market capitalism, baby.
Yeah. Well, credit to anybody doing innovative stuff if it works and they're providing a valuable service. I mean, I think, it's easy for us to play the, the guys from the Muppets up in the, in the.
I will say though, so everything that you just said is 100% legit. Like, I would never build my business on a domain name, a third level domain name that relies on somebody else. It just doesn't seem like good, business. But to each his own. But I have always had this since the very early days when I started to get serious about investing in domains and thinking about domains. I always had the sense that we're highly underutilizing the left of the dot. That there's a lot of opportunity for subdomains that and even third levels and fourth levels, and I don't know. I'm not. I feel like that sort of expansion is. I don't know what will drive it, but
Yeah.
I just have a very strong feeling that there's a whole space there to the left of the dot that isn't really being utilized, and I am starting to see it more with documentation and with creating these subdomains for various specific purposes. But I do think if you own, I always use the example of mushrooms.com. It makes sense that you should be able to have oyster.mushrooms and magic.mushrooms and some of these really generic names are almost better off being utilized in that way. And I don't know if they'll be consolidated at some point, and then there's a registry that sort of offers specifically that. I mean, in some ways, that's what IT.com is trying to do. I don't know.
That would be an interesting. Yeah.
Go ahead, JT.
I was just going to say that would be an interesting, sort of direction for them to go, to take not just the IT.com subdomains, but create a service where if you have a domain that you could offer subdomains and offer people the ability to build a website and do email and all that, where you don't, can't manage that yourself, but almost like a subdomain registry. I think would be interesting.
Registry as a service kind of thing for that. Yeah, that is interesting.
And then because
I don't want to sidetrack us any further, but I actually have always kind of, and I think I've talked about it on here, but I've always sort of thought that like the future of VeriSign is probably some kind of sort of aftermarket registry as well. Like I can see a time when they make so much cash where it makes sense for them to sort of take that GoDaddy posture that GoDaddy did for a little while. Now they've totally pivoted away from it, but going out and just accumulating portfolios of domain names, and then literally, instead of the way that we do it, which is, put your domains out there and sell them, it's literally just almost like a parallel registry to the .com registry, whereby they basically have this massive inventory of domain names that they can put through the registrar path.
So they basically start doing premium names by registering them to themselves. You're saying?
Yeah, but you don't buy them. You just registered them for some premium fee. Basically, the way that new TLDs are done. Basically, it would look like that. That's what it would look like. But they can't do it on original registration.coms. But it's less clear to me that they can't do it on aftermarket domains. So let's say they went out in the aftermarket and accumulated a portfolio of, I don't know, 2 million domains.
Yeah, and are you saying leasing the individual domains, or are you just saying it's like a
leasing? I mean, leasing, basically just offering a contractual right in the same sense that you do when you register a .com. I think that for 99% of people, they would probably not even think about it as leasing. They would just look at it as, I bought this domain, and then the cost of buying that domain is whatever it is per year, whether it's monthly or
it's interesting where you have
in the same way it cost me $10 to register, a new domain today. I can register a premium name today for $10,000 a year or $15,000 a year, or exactly the same way that the new GTLDs are doing with their premium inventory, except that it's aftermarket inventory that is being treated like a aftermarket registry operator. And I think that's probably something like that is probably, the future if domains are not disrupted before then.
Well, I think it's the idea too of, as new TLDs, start to pull apart the argument of .com as a monopoly, and starts to give VeriSign more of an opportunity to, be more flexible with what they can actually do as far as what, buying, selling services, things like that. But let's not go all the way down that rabbit hole, though. I'm going to pull us out because we only have probably about 10 more minutes. One thing I do want to bring up, and because this is really, so Saiger had tweeted, and I just think the timing is cool, and I think the story is interesting. So we got aftermarket.com that just acquired domain.io, and Saiger tweeted yesterday saying, hey, this is kind of interesting, and then he tagged both DomainSherpa and Domain Name Wire. So this is the service we provide, Mike, to the domain space as a whole. You say, hey, I want two of the top sort of platforms in the space to discuss this issue that is interesting to me, and we're going to just make it happen. This is almost like an AI type of thing. where it's like you plug it in and want to know. So I want to be super reactive to this and kind of mention it because I think it's interesting because I wasn't even that aware that aftermarket.com. I don't know what has been happening with the domain or the site recently, and I know that
it's funny. I think did we just talk about aftermarket on our last episode with Amar?
Well, yeah, because Amar used to be an owner.
I think you had because someone misunderstood Amar saying that he owned it now, right? Whereas he sold it as part of that thought convergence sale.
Yeah.
Yeah. Aftermarket.com has an interesting history, right? Because Amar sold the technology behind that to Igloo.
To the escrow folks.
Well, I thought it was Igloo.
Continue.
Oh, maybe he might have sold it to Igloo. Might be right.
But he retained the domain name, right? Because they didn't want to pay for that. The amount that Amar wanted for that. So it sold in the Thought Convergence auction. That was a couple years ago. The kind of the liquidation auction, and I haven't
more than a couple. I mean, that was probably
it's like 3 or 4 years ago.
Yeah. I think 2011. I don't know. I looked it up, but and it was because I wrote about it on I can look this up here. So aftermarket.
2011 was when he sold the technology, but
sorry, 2021.
That's what I was going to say when you said
it was December of 2021. So it had so it sold. I have here that it sold for $280,000, but that was when they extended the auctions after that. But I think that was the final price there. I haven't paid much attention to it afterward, but it was funny because someone just the other day I was talking about how it'd be great if there was a way to sync your after Nick listings with Cedo. And like your prices, manage that all from one place. And apparently domain.io lets you do that. So then I saw this happen. So aftermarket.com is owned by Michael Esposito. And then I'm just looking at my communications here with Aaron Oxborough, right? Because he was running domain.io. So Michael is kind of the owner there. And, he has his own domain portfolio. And then Aaron and who is it? Frank, other guy.
Pavlonis.
Yeah, are kind of running it. So
okay.
So I don't I don't know what the future holds there, but I was actually just getting ready to start looking at domain.io and seeing, if that solution might be good for kind of managing your portfolio. So
I remember looking at domain.io a while ago and thinking it was pretty cool. I just wasn't prepared to sort of
dedicating.
You're handing over. Well, you're also, something like that. You're kind of, there's work and then there's handing over the keys, right?
Totally.
This system now has control. If you literally can change your price somewhere and it syncs somewhere else.
Yeah.
What if someone gets into that, right? And so that's always a risk. And any SaaS business in our industry, it's hard to get domainers to pay for anything.
They don't pay. They don't pay for anything.
And so
companies don't pay. The people don't pay. That's it.
That's why the podcasts are free.
Yeah, exactly. So,
but I think it's on the idea of another domain marketplace. I mean, we just DNWE just changed hands, right? That's obviously we talked about that on the last show. They're a lead sponsor now for DomainSherpa. And I always felt their value prop when it was Josh and Josh. There was a unique spin on that, which really was sort of a platform for domain investors. Sort of a liquidation. Obviously wholesale being literally in the name. So I think what differentiates you, right? You've got Afternic, you've got Sato, you've got, there's already a lot of stuff out. Some consolidations happening, which is probably helpful to some of the smaller players. I mean, Dan.com, right, is effectively sort of being absorbed in to Afternic.
I mean, that won't exist in a year's time, right? I mean, that will be just on Afternic, right?
Which then maybe creates opportunity for some of these other companies to, fill in sort of a little bit of the vacuum, FD, and some of the, I think,
Adam.
And so you have an opportunity again for space to be filled by other players that could take more market share, but I think kind of the point about domain.io, which I think is interesting, is that it's the tooling aspect that, where it helps you to either consolidate, make your time more efficient, obviously the goal is to make more sales, right? So whatever that ultimately, or to sell domains for higher prices. So at the end of the day, it's like, what helps me get to that point, right? And you would think that more eyeballs, the better. I mean, that's one thing that, Adam is doing that I think is interesting is, they're doing a whole lot of advertising, right? And then we see comments from either Andrew or Darpin talking about how, some of that targeted advertising is leading to sales of high value domains. And I think that's super interesting. And obviously the Afternic piece, the reason they have so much say in the way that they're able to, hey, we're going to now boost, and really all Boost is doing, it seems to be, is boosting how much they're getting paid. Yeah, exactly. But because they have so many eyeballs and coming through the registrar path and the GoDaddy influence and everything else, it's like there's obviously, there's a lot of value there. I mean, that's tough to give up, right? And so again, I think it'll be interesting to see the way a lot of these kind of sort of pieces fit together, how these players kind of coexist, who the winners and losers are. But I do think adding more functionality and creating ways to better consolidate and help just domainers, I think, could be somewhat of a winning formula. So I think that's interesting.
I'll say this: anyone who tries to create competition in this industry in the aftermarket, I welcome it. Competition is so important, and it keeps, you look at the innovation that Adam is doing and that Dan did, frankly, and how that pushed slowly but surely Afternic to make changes and start offering things. And as long as there are alternatives, it keeps the fire under you. Once you only have one company, they can raise commissions as much as they want.
Yeah.
They don't have to improve the service. And you see that in a lot of industries. You see that in financial software with Intuit, right? Where the software sucks and they triple the price over a couple of years. You see it in a lot of industries, and it's so important for us. And Cito hasn't really invested in their platform in a long time, but the fact that it's there, and you could theoretically, even though you wouldn't be in the GoDaddy path, move your names over there and get in front of all these other registrars. That's helpful. What Adam's doing, that is helpful as well for the industry.
Yeah.
So it's just,
I
will support anyone who tries.
Yeah.
Yeah.
Cito's aftermarket, from what I understand, is a very small part of that business. Their aftermarket is not very, very strong. It's mostly a parking company at this point.
Yeah. Totally.
But it wasn't always like that. And I think it is interesting, we even look at some of these.
I think it has actually mostly always been like that. I don't know if their sales numbers are up or down or sideways, in terms of aftermarket sales and brokerage. But I think people think about them as an aftermarket and a marketplace and all this, but in auctions. But it's I think vast majority. Like, I don't know what the number is, but I think it's.
I think you're right,
majority.
Especially from a profit standpoint.
Yeah, well, and I even remember again when I ran Namejet, Sato felt like a bigger force in the aftermarket space, period. And some of that's anecdotal, and obviously they still have Dave Evanson and Mark.
I don't think so. I think our brokerage business is significantly larger than theirs, and I think their marketplace business.
Well, they do a lot of volume, right? They're doing a significant amount of volume at the lower ends here.
Yeah.
And that was also the space that we, Namejet that was where we existed, right? So they were obviously a direct competitor. And I even remember, and Allemann, they, back in the day, like when we would lose an expiry stream from Namejet, it would be going over to GoDaddy, which wasn't anything I'd have control over because it was a partner, a JV partner thing, decision to be made. And I remember we'd have these conversations and you would be almost like borderline like disappointed or something because you're like, anything that consolidates, all the domains into one platform is, anti-competitive. It's not good for innovation, and ultimately it's probably anti-customer, other than the fact that the domains are all in one place. But, we even see it with, call it more legacy businesses outside of the domain space where, as things change, get disrupted. I saw a tweet or an article talking about like the ride share, Uber came in, disrupted taxi cabs. But then Uber itself became sort of this monolithic, like, I don't call it like a negative sort of toxic type of situation is from a company and, you know, some other thing. You can get into some of that detail, but what it did do is it pushed regular taxi cab companies to get a lot better. Right. So now,
start taking credit cards, you know.
That's what I mean. So now, like, you know, you can kind of pick and choose. Like, I don't need to take an Uber as much. I can literally just take a regular taxi and I get some of the same functionality. They'll take my card. I don't have to, like, in some cases, the quality of the service is improved. You know, they've added some things that in some cases, it's actually a better experience than an Uber or even a Lyft in some cities and places. So, you know, to your point, competition, you know, breeds innovation. It breeds sort of positive uplift. And, you know, so I think that in our space is no different, you know, with that kind of stuff. So, so it's an interesting development.
Compete, everyone, compete. And let me know about your new products so I can write about them. And some of them are going to suck. You know, creating a new marketplace from scratch is, you know, just a regular marketplace, probably not the way to go right now. But, you know, if anyone wants to try it, you know.
I mean, you know, with, you know, GBM auctions, you know, we gave that a try, and they're pushing on that hard, and they're making improvements. And, you know, basically we came to the conclusion that until they can onboard fiat users, it's it's a no-go. Right. And so we, you know, I was a sacrificial lamb, and I put a bunch of names in there, no reserve. And, you know, I don't know, they weren't like amazing names, but they were decent names. And they sold for $100 to $300 or $100 to $400 each.
Full disclosure, I
think what they've got, you know, is innovative, but, you know, it's like,
I got a great deal.
I was excited, you know, to do it because I've been watching this develop for 5 years, 6 years. And I knew, you know, down the line that what this concept of auction could do. But man, you just hit brick wall after brick wall after brick wall, and it's tough business.
Well, and in that particular thing with the GBM piece, I mean, the tech that they've developed is really cool, and I think there's so much potential there. And like you said,
I'm just talking about innovation in general and like launching these new services. Like I agree. I mean, the more competition, the more innovation, the better. But and
a lot of it will fail, and a lot of people lose money trying things. But you know, kudos to them for trying. So,
rising tide lifts all boats, man. Let's go, as we say on the show all the time. So, all right, cool. Well, look, I think we've covered a lot of ground. We're basically out of time. Anything
last you want to shout out? Anything you want to talk about? Or
no, I just invite anyone who likes this show. Check out my podcast, DNW.com/podcast, and Drew will be on there sometime again in the near future, and I'm sure it'll be a great episode as always. You can go back and listen to his old episodes on there too. Maybe he said something that he regrets. You know, you can go listen to it and ask him about it. But
so many things, many things.
But I appreciate y'all having me on. It's great to be on here.
Great to have you on.
Yeah,
man. So great stuff. Appreciate you taking the time. As I say on this show all the time too, with you guys are guests. It's really more like co-hosts, right? And, you know, obviously, especially for Drew. So thank you, Drew, as well, for your time as always. And to the audience, as I say in every show, thank you all for tuning in. Without you, there is no us. And so we did episode 1, and now we'll figure out what episode. Well, I mean, it wasn't exactly episode 1, but first interview followed by whatever number interview this is.
I'm going to call it 501 because we had exactly 500 on YouTube. So we're going to call this 501. So it's basically the start of a new epoch.
There you go. And I will confirm with Billy. We'll put that in the show notes as well, and then maybe even tweet about it. But all good stuff. And so thanks everybody, all the guests, hosts, audience as well. We'll see everybody next time here on DomainSherpa, where all roads lead to domains. Peace out, y'all.